Guys, welcome to another Trade Genius podcast. Bob and Phil. What do automobile loans, oil, and vacation homes have in common? Well, you're about to find out. You are definitely not going to want to miss this video. Let's dive in.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob. So 3 fairly random items that might trigger a collapse, I guess you could say, hence the Jenga illustration. So take us through it.
Yeah, so Phil, how do you get to your vacation home when your car has been repossessed and you don't have enough money to pay for the gas?
I see where you're going.
Yeah. All right, guys. Thank you for listening to our video today. But look, seriously, though, some really weird things are happening. You guys aren't surprised we're bringing these things out. But the first chart I want to show you, look, I am a mega oil bull. And when I saw this chart today, my heart actually skipped a beat because Phil had to bring me back down from cloud nine to reality, and we'll tell you what reality is in a second. Look at the global supply and demand imbalance on oil for the fourth quarter of 2024. We've never been this far out of balance ever. And it's just setting the oil market up for a supply shock price run. Now, I'm going to go caveat here because we've been telling you guys since June to get on the energy bull train. We crossed $90 today. I think we went from leverage short to leverage long now with speculators, which is a red flag. And we are coming up to the September 15th, what I call the beginning of the shoulder season, where even though seasonals are still a little bit bullish into the end of October in oil, I think we front ran a lot of it. So I'm not saying oil to short oil, and I'm still keeping my positioning in oil, but we could pull back these next 2 weeks because we're going into the Rosh Hashanah and high volatility end of September, sell season here, Phil. So we could pull back. I wouldn't be surprised. Markets, oil has pulled back a couple times, $6, $8 during this move up higher. So if we do get another dip, you're going to take a good hard look at maybe jumping into some really quality names because their earning reports coming up in October and November are going to be absolutely stellar. Look, I told people to get into ExxonMobil at 102 45 days ago. It's now about ready to cross 119 and double top. I mean, you don't see mega caps moving 20% like that. And unlike NVIDIA and SMCI, this being backed by the pricing power of the underlying commodity. And so, and it's still, ExxonMobil is still dirt cheap, Phil. But that's not the only thing that's happening. Eventually, these other two things is going to probably kill oil, but not yet. And this is the one that really kind of makes me a little bit sad. I'm happy in a sense, because I'm going to be out in the car market. So I love the pressure on the dealers here for cutting deals. But look at the delinquencies. I got this out strictly for auto, but then look at everything else, Phil.
So bad.
It's scary.
So bad.
I don't know what to tell people. I guess I'm just absolutely shocked that, the Jenga tower hasn't already collapsed, and that I think, this market is being, not just the stock market, the economic market is just being held up here by, bailing wire here at this point because, man, so many people are just ready to run off the cliff here. And this third chart is the one that you brought up. And this is why, we went ahead and shorted Airbnb this week. Not only because it's grotesquely overvalued from a stock standpoint, but vacation homes are basically there's no buyers for these collateral properties. Okay.
Right.
And depending on, a lot of time you can get non-recourse loans now, I think is a general rule, but if you use home equity line of credit to buy some of these things, they can come after these properties, so we may be in a situation where people use ARMs, and they did it before, Phil. You remember from 2006 to 2008, they started coming with these option ARMs. People were daisy chaining their collateral. So what you would do is you would get a loan at 1%, and you're like, I could cash flow this thing. And then it starts cash flowing. You're like, hey, you know what? I can use the cash flow from the down payment on a second property. And then interest rates started to rapidly increase, and it just blew these people right out of the water. And I think this is what's going to probably set up again this time. There's nobody buying these properties. And, and remember, who owns vacation properties? If this is including Airbnb people, that's bad enough. But these are people like, hey, I bought a cabin, to enjoy my retirement years and this and everything. Now you're sitting there saying, shoot, man, I got to sell this damn thing because I can't afford to live down in the city. And I think they're gonna find out that it's gonna set the market lower across the board for everything, because people are gonna start getting desperate. And this is one of the reasons why I don't like real estate, because it becomes so illiquid that you can't get out of the trades until you literally go bankrupt from it.
Yeah, real estate's kind of like you need to swing trade real estate, right? Like you have to get in after a washout, you have to hold for a long time, and then you have to sell into strength. And I think that time of selling into strength is coming into a close. I do think real estate lags quite a bit, but I think all of the clues are there for us, right? I mean, you've got, I think when we start getting some of the statistics out over the next couple of quarters with Airbnb, I agree with you on the short. I think that they have tremendous headwinds ahead of us. But if you notice here from basically all through COVID, all that stimulus money, people, I mean, they weren't stupid, right? Everyone's stuck home. What are they going to do? Go on vacation with free stimmy money. Interest rates are super low. So people that were savvy in that regard opened up several secondary properties. But it's over, right? There's no more, they can't afford it at these rates, and there's no more demand. Now, like you mentioned, if there's balloon payments that are coming due because they opted for a very, very low rate, under 2% in exchange for doing an ARM or something like that, that's going to be a forced liquidation of inventory. And that is the one catalyst that, you and I are looking at to kind of break this standoff that we have between buyers and sellers, which can go on for a few more months. But once that starts to happen, look, all the comps are going to come down, and all the collateral value that people have on these loans, especially if they're daisy chain, like Bob said, then your loan to value ratios are going to go down. Then what's going to happen? So there is definitely a risk of dominoes falling here, even though it seems like there's no catalyst. And at the moment, you're correct. There is no catalyst. So the market's going to look resilient, and it can continue to do so for a few more months. But I am quite concerned that, if this plays out like that, we're probably looking at 30 to 40% drop in real estate values across the board. And this would probably apex into, I would say, the last part of 2024, maybe in the first quarter of 2025 would be my guess. And then you're finally going to have your washout from this post-COVID bubble. They just take a lot of time, and it kind of will lull, your average person to sleep, thinking that it's, there's no sell coming, there's no crash coming. And a lot of people have been talking about a crash. A lot of people have been talking about a crash in the stock market. It's not that they're wrong. It's just that a lot of times it's not the timing that everyone's expecting, Bob.
Yeah. And look, I look back at 2007, 2008, and, the sirens were coming out in 2006 on these option arms. That's when I sold my rental properties in 2006. I'm like, whoa, option arms. I said, I'm getting out. It took another 2 years, and then the market imploded 50%. Right. And I think we're probably a year into that 2-year thing here now, and I think people are a little bit more leveraged this time around. But look, I don't care personally, because I don't have really a dog in the hunt that I got to worry about. I have a paid off rental property, so I could just, whatever happens with it. But people with Airbnbs, what they got to start worrying about is the even if they don't lose their properties, they may have to be fire selling their rents. Okay, that's going to bring the value of Airbnb down, because they live off of commissions. It's like the price of gold falling, right? What happens to the gold miners? Well, if the price of rents start falling on these secondary markets, the Airbnb is going to collapse. So That's a trade that's a trade to watch. Even if they hold off liquidating these properties, they're just not going to be very valuable.
Right.
And we're already starting to see it. So, it's going to be really interesting to watch, Phil. But look, this is just tip of the iceberg stuff, guys. It's if we haven't made this point clear by now, the cake is already baked. Recession's already here. The market's already struggling. The job market, look, Google just is laying off their entire recruiting staff. Okay. What does that tell you? And when we get to the fourth quarter, for these companies to try to make their quarters, you're going to start seeing more and more layoffs coming into Christmas. And if Christmas is a dud, then, first quarter 2024 is going to be just horrendous, Phil.
I agree. So now we're getting into that critical phase, and we've warned people about the back half of this year. And now we're getting into the actual part where it should start to see weakness. We're going into the end of September seasonality weakness. And we're also going into where I'm really looking at is October, Bob, because that's where all of the debt issuance starts to change from the Treasury after their quarterly refunding announcement. And they were showing that, because they have to show us what they're going to do. It's law. And we know that now after we get into October, a lot more long-term debt is going to be issued. I've been pounding on that point lately because it really does matter. It's going to suck a lot of liquidity out of the system. So I think weakness into the end of the month, and then October, things are really going to accelerate to the downside, or at least that's the risk. And I think you guys have to be careful now going forward after tomorrow.
Totally agree. Anyway, that's all I have today, Phil.
All right, guys. Well, thanks for watching. Appreciate the likes and subscriptions to the channel. If you guys don't mind, also hit that notification bell to all. That really helps out our channel and the algorithm. And also check out our specials and newsletter over at tradegenius.co. All the tools you need to navigate these markets day in and day out. We'll see you on tomorrow's video, guys. Take care. Bye-bye.
Trade Genius.